How's it going, Forever Blue students? In this video, I'm going to be going over advanced market formations. Now, you guys do know what market formations is. It just means head and shoulders, double bottoms, triple tops, inverted head and shoulders, all that stuff, all that fun stuff, right? I mean, everyone knows these structures, but not everyone can identify them in real time and also predict where they're going to settle in. So, in my way of viewing the market, the first thing I do is I look for an easy to identify impulse leg. So that means an easy to identify move. So let's say a big up move. And then I wait for the pullback before I get into the uptrend, right? So I always look for something easy to identify, okay? So if you guys are trading a chart or a currency that doesn't have an easy to identify move, or you don't know what's going on, it doesn't look like it's setting up anything, then just switch pairs, okay? There's tons of pairs, there's tons of opportunities, there's no shortage of opportunities, just finding pretty much the right pair for you, you know what I mean? The right opportunity for you that you see. I tell people not to switch pairs too much because then you're going to miss opportunities on one while you switch to another. So just try to pick like 2 to 3 pairs and just watch those like religiously. Like mine is Australian dollar, New Zealand dollar, and Canadian. Like I know where they're at like every week. Every month, I know their levels, I know everything like about those pairs, just because I follow them so frequently. Okay, so going back to advanced market formation, so this is very easy to identify, right? Just find a move to the upside or the downside, right? Very easy to identify move. Pick your bias first. Okay, so if we're in an uptrend, obviously we're going to keep getting pullbacks and then continuations up, right? So pick your bias first. And then actually we'll start getting into the market formations. All right, so let me just measure out this up move, low to high. Okay, I don't have all my retracements on here. Let me put in the 38.2 just to make a point. It's not going to be a boring video, guys. Right now, I'll go to the charts. I'll go to the charts right now. Okay, so what I've noticed is when price actually retraces to the 38.2 and just chills there without actually breaking down, what tends to happen is this. Let's see if I can get it in here properly. It's hard to do without candlesticks, right? And then we'll finally get the break up. Okay, so whenever you see price settling in at the 38.2, most likely what's going to happen is this is what the market tends to do. It tends to make you know, triangle type patterns. Like let's say you know, this is a descending triangle in this instance, and then it breaks to the upside. You'll make symmetrical triangles. You'll make, you know what I mean, this is a descending triangle, obviously, but at this 38.2, that's what you're going to tend to get. You're going to tend to get a lot of triangles. So let me actually say like a triangle, symmetrical, right? So on both sides, like that. All right, that's near the 38.2. Or you'll get, let's say, price will flatten out at the top for uptrend, and then it'll make higher lows like this, and then you'll get a break to the upside. Okay, but these formations, these triangles, wedges, whatever you want to call them, most of these, when they form, it's usually near the 38.2 from what I've seen in the market. Okay, so whenever I see 38.2 and then the market starts making some type of formation like a triangle, wedge type pattern, a descending triangle, whatever, ascending triangle, well, pretty much my eyes are going to be looking for a break, all right, back into the trend continuation. But for some reason they form near the 38.2. All right, that's because those are strong continuation trades. Okay, very, very strong continuation trades. So let me erase a couple of these. Oops. Right now we'll get to the charts, guys. Chill out. Okay, so near the 38.2, you're gonna get those triangle type formations. All right, and then once you actually get a deeper retracement near the 618. All right, this is what I love to see, right? Remember I told you guys I like to see trades near that 618, 786 area before I take it. What tends to happen, from my experience, is whenever, instead of getting a clear bounce off like this, right, when you get a perfect like ABCD pattern, or you get a perfect trend continuation where it just touches the 618 and bounces, what tends to happen, depending on the session and all that, right? What tends to happen is that price is going to consolidate around here. Okay, so price will consolidate around here. All right, and it'll make this type of formation. Can you guys tell me what that is? All right, I'll give you a second. Shoulder, head, shoulder. Inverted head and shoulders. You know, this is just a simple market formation, but going a little bit further beyond what, you know, people don't realize. Like, you know, I'm just watching charts for so long. I like whenever I see these setups, like inverted head and shoulders near the 61.8, and then that head taps the 786. And then what I usually do is I wait for the shoulder to form, and then some type of reversal pattern right here. All right. So some type of reversal pattern right here on the 1 hour chart. All right. Always 1 hour and up. Once I get the reversal pattern forming right here off that 61.8 right shoulder, inverted head and shoulders, trend continuation up, I take the trade. Okay, I enter somewhere in there. All right. That's what I like to see. I like to see these type of formations. Also, of course, sometimes you don't get those deep all the way to the 786, right? But you get something like this. All right. You get a little head peak through the 618, right? That'll be the head, and then you'll get the shoulders coming in. All right, and then you'll get a takeoff. Another variation on this one, the shoulders will come in at the 38.2. So let me lighten this up. So the shoulders will come in at the 38.2, and then that head spike, the head will be at the 61.8. Okay, the same thing. Look for an entry off a pullback, right? After it takes off from whatever Fibonacci number you're, you know, whatever it rejects off of, let it take off a little bit, and then let it pull back, and then form some type of pattern here, and then take it long again. Okay. This is for an uptrend. Okay. For a downtrend, it would be the same thing, just upside down, head and shoulders, double tops. Okay. So let me actually go over double bottoms. You know, this is just my view of looking at the market, guys. Okay. I'm sure it's going to help you. You're going to start spotting some really easy setups. Okay, so other times you're going to get these type of formations. Okay, remember, all these formations are always going to be happening 38.2, 61.8, 786. Okay, that's when I like to see those formations. Okay, sometimes you're going to get this. Let's see if I can draw it in here. Sometimes you'll get this. All right, it's just identifying it once you see it form, and taking advantage of it, right? If you missed the double bottom, if you missed the entry right here off the reversal pattern on the double bottom, you can take it when it breaks structure right here. Okay, when it breaks structure, you can start looking to go long. Okay, this is just to get a better entry point on the uptrend. All right, that's why we wait for the pullbacks. All right, so this is what tends to happen. You're not going to see this every time, right? But you're going to see it every now and then. You're going to see. Just go back to your charts, go back testing, and you'll see these formations. All right, you'll always see them near those important Fibonacci numbers. That's when you see those formations form, right near those 61.8, 786 formations, right? 382, mostly triangle type formations, and then you get the trend continuation, right? So let me stop talking. You know, triple bottom here, right? Head and shoulders, inverted head and shoulders variation, double bottom. Sometimes you get a single bottom, V bottom, right, and it takes off. Those are a little bit harder to see, to get entries on, right? Because I usually like to wait for a retest or some type of pattern to form. These patterns are going to show up more often on the 1 hour chart. Okay, on the 4 hour chart, they're a little bit harder to see. There's not enough candles, right, to see what's going on. The 1 hour chart's the best for spotting these. I've taken many trades based off of this, guys, and trust me, it works. All right, when you spot that, when you have a correct bias, right, up or downtrend, right, bullish trend or bearish trend, and then just waiting for a pullback, and then just waiting for a formation to form, and then just taking it again back into the trend. It's pretty simple. All right, so let me actually hop into the charts. Let's get right on the charts. I'll show you an example. All right. Okay, guys, here I am on daily chart of the Australian dollar. I'm here December 2014. Okay, so you can go back and back test it yourself. You guys don't know I'm lying. I'm not making up charts here. This is a real example. Okay, so this is a very good example. This is going the other way, so this is going bearish. Okay, so try to identify right away. Look, I identify it very easily just because, you know, I'm using my quarter points as support or resistance, and notice that when these move extend, usually it finishes near a quarter point. So it's just very easy to see. This chart is not complete. I added on something to the quarter points, so this is just a basic chart. All right, we'll get more into the advanced quarter points in another video. So let me actually get into this formation. All right, so we have an easy to identify down move. Very, very easy to identify down move. Okay, can we all agree? Can all traders agree that this is a very easy to identify down move? All right, price peaked here, made a low here, retraced off of that. We can all agree on that one, right? Okay, now this is where your intuition starts to come into play. A little bit more visual. So look, we have a retracement. Once again, like I told you guys, if the market's going bearish, we're just going to wait for a pullback to get a better entry price. All right. So then when the market starts falling again, we have a very, very good entry. Instead of getting in here, we're going to get in here. All right, somewhere in here. Okay, so let me measure it out. Once again, nothing without measurements. All right, I don't take a trade without measuring what's going on first. All right, so we have an easy to identify high to low. Measure it high to low. Okay, and I want you to notice something. Notice where price stalled out at. The 618 near the 786, right here in this area, right? This little area is just consolidated here for a while. All right, but I want you to try to notice something. You have a shoulder, a head, and a shoulder right here. Okay, so let me actually draw it in. I'm taking it slow for you guys. Do not want to rush it. There's no rush in this game. Right? There's no rush in the market. It's better to know what you're doing than just rush it. All right, so. And then we finally get a break of structure right there. All right, retest the low. Okay, so this is exactly what I was showing you in the drawing. Okay, in the beginning of the video. I know it's very monotonous stuff, but trust me, it's going to help your trading. All right, so check it out. Zoom in. Let's break it down. Okay, so we have a down move. We have a retracement. Liquid forms. A head and shoulders. Shoulder. Pull back. Make higher lows. There's the head. All right, it's making higher lows. We still haven't taken a short yet. All right, makes a head. Look where it stalled out at our quarter point, 9,500. That's another clue right there. That's price is going to turn around right when it hits that quarter point, and then you're near an important Fibonacci level, and then it rejects off of it. Most likely going to continue the other way, down, right? In this case. Okay, so then we have a pullback right away. Once again, hit our trend line of this neckline, kept making higher lows. Pull back. There's the shoulder at the 61.8, like I told you guys. Okay, shoulder right here. Shoulder right here. Whoops. No, I was gonna mess up. Okay, so there's the head right here at the 786. All right, near miss. Okay. Let me change this one to a different color. It's the head. Whoops. Go back to this. Okay. Yeah, let me change this color, blue. Okay, guys, this is exactly what I've been showing you in the illustrations. All right, we have a down move, we have a retracement, we have a head and shoulders. Where does the head come in? At the 786. Shoulders come in at the 618. It's beautiful. Neckline breaks, take it short. All right, target the previous low. Okay. Okay, you're probably asking me, okay, well, this is a daily setup. This took a long time to complete. Exactly, it took a long time to complete, so you have time. You have time to plan it out. You have time to mark it up. You don't have to rush it, right? Like on a 5-minute chart, you can't take your time, right? I like taking my time. That's why I use higher time frames. So look, price kept bouncing off this neckline, and then we finally get the break right here. This would have been your entry. A confirmed entry would have been a break close below. You would have shorted it right here, all right? An earlier entry would have been off this reversal pattern, close below the 61.8, and it looks like it's about to break the neckline, right? But that's not a confirmed entry until it breaks. Sometimes you can take them a little bit early, but sometimes it's better to be safe, all right? But in this instance, it paid out, both of them, all right? Both entries paid out. So one here, all right? And then your target is going to be the previous low, all right? If you're shorting it, your target's going to be the previous low, okay? Very, very simple, guys. So that's a head and shoulders formation. Advanced market formation. Why is it an advanced market formation? Because we're adding in Fibonacci to it. Make sense? Okay, so let's go to another example. I think it's on British pound. There's a good example, and I'll go on Australian British pound, and then I'll go on Canadian, and then I think there might have been one on New Zealand, but just very simple formations right near those fib levels, like I've been telling you guys. So this is advanced market formation. So let me switch pairs real quick. Okay, guys, I'm on British pound dollar right now. Another example, advanced market formation. All right, so we have a break of structure right here. As you notice right here, price moved up very quickly, very fast, right? But it's very easy to identify. Whenever you see these big moves, it's very, very easy to identify, right? So you have a big move to the upside. We have a break of structure, a break of a lower high. That's when we know we could possibly be going into an uptrend. We get a pullback. This is when we start to look for our entries long, okay? Notice where it pulled back to, the 382. What do we expect out of the 382? Triangle type formations, you know, maybe a head and shoulders, but not very likely. Most likely going to be, you know, some type of triangle formation, something like that, all right? Some type of wedge, something like that, okay? So let's go to the 1 hour chart so we can actually see what's going on here. All right, so all I did was draw an arrow from this low to this high, and then I measured it with my Fibonacci. Low to high, retracement 382. And it looks like we got a double bottom right here. But let's actually go to the 1 hour chart. This is a 4 hour chart, so let's go to the 1 hour chart. Let me go back. Right here, this is beautiful. I know it's beautiful because I took the trade. Okay. Okay, this is nice. This is nice right here. This is a nice formation. A little bit more of a head and shoulders type pattern. Shoulder right here. This is a tiny head and shoulders pattern. So there's a retracement. Get this in here for you guys. I mean, I already know all this stuff, guys, but I'm trying to explain it to you in a way that makes sense for you guys. I mean, this is just something I noticed. You know, I didn't learn this from anybody. This is me actually going through the market and just seeing what's going on. All right, so time after time I saw these structures, so maybe it can help you with your trading as well. So, okay, so we got a pullback right here. There's a shoulder, and then we get the takeoff. Finally get break the high. There's the retest market structure, right? Those people who want to know more about market structure right there, we had a break of the high, and there's the retest. All right, oops, right here, right here. All right, so you see how we broke the high? There's the retest, and then we take off again. Okay, so that's just simple market structure. This advanced market formation, all right, we have an inverted head and shoulders. It's very, very ugly. I think at first it was like a triangle type pattern, and then it came back to retest at low. So what I'm going to do is actually just go on the 4 hour chart one more time. And then what I'm going to do is draw a trend line from this high to this lower high right here. All right, this is a counter trend line. Right. Try to make it right here. That. Boom. I'll put another trend line right here. That one got broken, obviously. Alright, so let's go back to the 1 hour chart. This is not the best setup, but it still did exactly what I'm telling you guys. Made a formation right at those fibs. Alright, so this is a strong trend. That's why it's at 382. Alright, so if you notice, the head is right here at the 382, shoulders just above. Alright. Okay, so it's a very ugly triple bottom, right? Some people like to call them. On the 4 hour chart, it looks more like a double bottom. But what I want you to notice is these counter trend lines. Okay, so whenever we get a structure break like this, all right, so it broke this previous high, and then we get those pullbacks into the 382. All right, we're going to start doing our trend lines, all right? Counter trend lines. Counter trend lines means you expect it to keep going up, but your trend lines are going down. So whenever it breaks, you're going to get those trend continuation trades, okay? So these are most of the trades I take. It's just trend continuation trades. Notice right away, look, this trend line got broken. It just came back for the retest, and then it took off. Okay, so I made a higher low right here. So that gives you your clue. Higher low, did not break 38.2. Higher low, starting to climb again. We're going back into the uptrend. Okay, hope that one makes sense. Let me show you actually a better one on Canadian dollars. So let me actually switch over to Canadian real fast. Okay guys, I'm here on Canadian dollar on the 4-hour chart. This just happened recently, so you can actually check it out for yourself. The 22nd of March. Let me see, wait, no, February 22nd, okay? We have Canadian dollar right here. I want you to focus on this structure right here. So let me zoom in on this one. Zoom in. Okay. Besides this bearish shark we had, which I go over in one of the harmonic videos, let me take that off so you guys don't get confused. But okay, so let's break it down step by step. We have a retest of the high right here. We didn't break it, but then we retraced and we made a higher low, and we never broke this low. All right, so in my mind, more upside potential. Okay, so let me draw out the arrows once again, guys. So we have a down move, we have an up move, I'm sorry, so a low to high right here. All right, we retested previous high. This is where market structure comes in handy, right? We retested a previous high, failed to break. So what does that mean? We're going to have to see if that high is going to break or not. All right, we're going to have to see. All right, when these situations happen, you have to see which is the high going to break or is the low going to break. Okay, so we get a pullback. Consolidation. Spike it through, come back up, retrace a little bit, and then we get the takeoff. All the way up. Okay, you see that structure? What do you guys see? You zoom in. This is a 4-hour chart, so right now I'll go on the 1 hour. It'll be way easier to see. So once again, guys, up move, retracement, you get a formation right here. Okay, so let me throw in my fib here before I go on the 1 hour chart. So low, up to the high. Alright, we're expecting more up move, right? Check that out. Look where that spike came in, right at the 786. The shoulders at the 618. My God, could have been more perfect. Let me go on the 1 hour chart. Come on, load up. Okay. Okay, so right here, guys, this is a 1 hour chart. This is way easier to see. Okay, so let me erase these real quick just to show you. I want to show you the candles, what's actually going on here. Okay, so we have a very obvious up move, guys. Hit the high, hit a previous high. That's why I pulled back. But you notice this pullback, what happened with this formation, all right? Head and shoulders inverted. The spike came right like I told you at the 786. That's beautiful. All right. That spike came in at the 786, just spiked real quick, came back up, all right, and then it just consolidated. There's another shoulder where the shoulders come in, 618. And then we get the takeoff. If you didn't know which direction to go, just use some basic market structure. You don't need a brain surgeon for this. All right, it's going to break out of this range. You're going to look to go with the break. Okay. Obviously, the spike is to the low. Spike is to the 786, you're most likely going to get an uptrend. All right, and then the 4 hour chart and all that will show you some nice hammers and all that on there. So it's very easy to identify, guys, once you guys get the hang of it. I'm trying to make this line straight. Can't for the life of me. Okay, so I'll just do a straight horizontal line right here. Oops. Taking it slow for you guys, but it's going to be worth it. I promise you, this is going to help you a lot. Okay, so if you don't know which way to take it off these formations, all right, just do your box right here, just do your range. Notice where the spike came in, hit all the stop losses of the buyers, picked up more sellers, picked up any orders that are here. You know, the bankers as well, they get entries right here. They put buy limits right here near the 786, or they just buy right when it touches it. Okay, so what happened? Boom, price just made a big wick. That's a big clue right there. When price makes big wicks, especially when we're talking about those Fibonacci, important Fibonacci numbers, when price makes those big wicks right near those zones, right, and then pulls all the way back, that's your clue that something's going on, right? So then the price chills here, there's the reversal pattern, just like I told you, on the shoulder, on the right shoulder. I mean, guys, this is, I can't make this stuff up. Like, this is too easy. Your entry would have been right there on the right shoulder with the reversal pattern confirming close, all right? Once that reversal pattern closes, entry in there, stop loss can either be right here below this right shoulder or it can be below the low. All right, when you're taking head and shoulder formations, I usually put them right above the shoulders. Okay, so if that breaks, pretty much is invalidated, right? So maybe I'll put a little bit more, give it some breathing room. So right near this low, right here in the middle, the 61 and the 786, right? Probably near the 707. Okay, so my stop loss will be going somewhere here. Okay, and then my entry's in there. Long. Okay, like I said, I only use the 1 hour chart for entries and recognizing formations. I don't trade like purely off the 1 hour chart like other people do. I trade mostly off the H4 daily chart. All right, so I'm only going down to these time frames. Once I've identified a setup, I go down to a lower time frame, and then I start looking no lower than the 1 hour chart, guys. All right, like, you guys kill me with the 15-minute. I know I used to be like that. I used to watch the 15-minute, and it's just hell. I just can't trade that anymore. So I only trade the 1 hour and up. I do my analysis on H4 daily and weekly, and then I go down to a 1 hour chart for entries. Only after I've identified like a perfect setup, then I'll go down to the 1 hour chart and see if I can get a nice reversal pattern in there, get an early entry, and then take it long. Let's say if I took it long, what I would do is I would leave my trade in with a stop loss, wait for the daily bar to close. Once that daily bar closes bullish, I'll just move my stop loss up, tighten it up, and then just let it run. Once again, always put your stop loss in your structure. So let's say my trade goes into profit, I would just move my stop loss, right? This is my stop loss. I would just move it past break even, a little bit above structure right here, right? I'd do it below structure. To be safe, you do it below structure, but it's already going into profit. So look at that little pullback. Once that little pullback's done, you can start moving it up. Boom, boom, boom. Start trailing, start ghosting. Or I call it ghosting. All right, start ghosting that stop loss, right? But you have to be careful, guys, with your stop loss if you ghost it, okay? Do it properly, all right? Use structure to protect you, all right? Use structure, all right? So, but once price took off from this area, you know you're going into an uptrend. That 786 spike was big clue. You're going to take off, and then boom, you took off. The nice thing about this trade as well, let me draw it out for you guys. If you go to the harmonic video where I show, I think it's a shark, where I show a shark, how to draw them and all that. So 50%, 886, spike through, close back above, 86, right there. Okay, so when we draw out a harmonic, okay, you don't need the harmonics for this section, like for this video, you don't need harmonics, but this was just a nice confirmation for me. I had a harmonic right here, and you guys do know that when a harmonic forms, it doesn't mean the price is just gonna drop forever, okay? In this situation, what happened is, if you do your take profit targets A to D or C to D, in this case it would have been C to D because the C leg spiked through and then closed back above, so C to D. Your take profits would have been 382 and 618 once again. Off that harmonic pattern, that would have been your take profits, right? 382, 618, all right? So you would have been out of your sells, okay? And then you would have just been watching, and all the banks got out of their sells too. Because if you notice, look where price started struggling. Everyone's taking profit right here. Spike through, trick them, and then you get the takeoff. Boom. And look what happened. Price take off, hit another zone, struggle. But yeah, guys, I mean, it's very, very simple market structure. Once again, just find an easy identify move, uptrend or a downtrend, or a down move, up move. Something easy to identify. Measure it, wait for the pullback, and wait to see what type of formation forms there, right? If it's going to be a trend continuation trade, there's going to be some type of formation here, okay? Some type of formation here. Double top, double bottom, triple top, head and shoulders, inverted head and shoulders, spikes, anything like that. All right, that's what you're going to wait for. You're going to wait for that to form, and then you're going to enter. You're not going to enter right here in the middle of this chaos right here. You're going to wait till you see something easy to identify. Remember, easy to identify. All right, if you can't see it easily, don't even trade it. Don't even trade it, okay? The market's going to be here. No rush. There's always good setups, all right? So I think there's another one of these similar type of setup, but it was near the 382, made a triangle type pattern, I think, on the Euro USD. I think I remember one. There's also head and shoulders inverted, just like this, exactly like this on the Euro USD. So let me actually switch over to the Euro USD, and that'll be the last example I show you guys. I hope you learned something, and go back testing, and you guys will see. Okay, so let me go on Euro USD real quick. Okay, guys, I'm here on Euro USD 1 hour chart. I'm going to show you two examples on the Euro USD just to show you that looking for these market formations, you're going to find them. They just come and up, whenever the market's trending and pulls back, you're going to start noticing them forming. Okay, so I have this up move right here, very easy to see for me, low to high, and then we get the retracement. All right, we get the super deep retracement, back, then we get a takeoff once again, break the high, all right, before coming back. Okay, but what I want you to notice on this retracement is what forms. All right, can you guys see it? I skipped over that left shoulder for a reason, so you guys can spot it. Very, very ugly head and shoulders, but it's still head and shoulders nonetheless, inverted, right? So I'm going to measure my move, low up to the high, and I'm going to see how far that retracement goes. I know it goes deep, so 886, but what happened? The shoulders once again sit at the 618. There's the shoulders, there's the head. All right, you see it? Very, very ugly setup, guys, but nonetheless, remember Euro USD is the most traded pair, so that's why it's so volatile. They got to take people out. Okay, but notice it's the same thing, head and shoulders inverted, with the head coming in, super deep retracement, right? 786 past it, 886. All right, so they must have had a lot of people long to come all the way down here to take them out. Okay, but it's the same thing, guys. Head and shoulders inverted once again near those Fibonacci numbers I told you, 786, 618. The shoulder sitting at the 618, and then you get a takeoff. Okay, this would have been your clue right here to go long. It broke a lower high, and then you wait for the pullback. Makes a shoulder at the 618. Once again, this is the shoulder area. All right, so if it does not break the shoulder, did not break it, boom, you're going long. All right, very, very simple. Okay, so let me actually scroll back a little bit, and I'll show you this example right here. See if I can get a fit on here. Yeah, that's a nice example. The reason I say it's a nice example is because it flattened out right here, so I want to see what Fibonacci that is. Okay, so I have a spike to the high, and then I get a down move. Okay, I get a retracement, and then I get a down move again. Let's try to see where that retracement came in right there. Okay, so let me do high to low in this situation, this circumstance. All right, so what did I say? 382. What happens at the 382? Like I told you guys, triangle type formations. In this case, semi-rectangle formation, wedges, all that. So you want to see it. All right, so you see how it's sat right there at 382. Let's just take our counter trend line right here from this low. Try to connect it to a 2-point. All right, check this out. All right, there's a few ways to do this. This is a hard situation because there's no clean counter trend line right here. You just kind of got to make it up as you go. Notice there's no wicks right here, so it's kind of hard to connect it to a wick when there's no wicks in this situation, right? So you have a trend line, counter trend line going up. You can also do one right here, up to this low, and then right through, right here. I'll have multiple counter trend lines, depending on how ugly the pair is. Like this is ugly, so I would have probably two. But notice once again, it flattened out at the top. It made higher lows, right? It kept making higher lows, higher lows, higher lows, and then we finally get the breakthrough. All right, so what is that? Ascending triangle. All right, it flattened out at the top, kept making higher lows. Ascending triangle. Okay. Very simple. Very, very simple. Okay. Remember, you can get these formations in a bull market or a bear market, guys. Okay, so don't trip out. Okay, but you just overall trend, pick your bias overall, measure it out, see if you can get some type of formation. This is a trend continuation trade. What did I tell you? 38.2 trend continuation trades. All right, so if price chills there at 382, start expecting some type of formation. It's very simple, guys. Very, very simple. I'm trying to simplify this as much as possible. You know, I just look at the market and just such a, you know, I have such a, like, I don't want to not to brag or anything, but I look at the market for what it is, and for the type of patterns that form, it's very easy for me to recognize, you know, after doing this for a long time. I can just kind of expect what's going to happen. So notice right here when price ranged, notice all the wicks are to the top, trapping buyers, and then this little last wick It just happened to be higher than the previous wicks, and then it closed below and make a reversal pattern drop. All right, so they just hit all stop losses. Okay. So what tends to happen in these ranges is that people put in an order. They put their stop loss super tight, and then what happens just before the move happens? What happens, guys? Tell me. What happens before a big move? Can anybody tell me? A pullback or some type of stop hunt. They'll take everybody out, and then they'll move the market the direction you thought of it. It's going to move, right? So how do you avoid getting in too early? Well, you trade at the appropriate times, okay? So you trade London session open. Give it a little bit of time sometimes. Sometimes they take a while to warm up, but you have to trade properly, guys. You have to trade London session open, New York open, or Asian session open. All right, and I mean Asian session open like in the middle of Asian session when the volatility goes up, like 7:30 Central Time. For London session, it's gonna be like 3 in the morning Central Time or so. That's when the volatility picks up. And then for New York time, it's going to be 8 to 10 in the morning Central Time. That's when you're going to see the moves. Okay, if you're getting in between those times, you're most likely going to get consolidation or you're going to get stop hunted. Okay, that's what I figured out. I mean, if I get in too early on a trade, I'm either going to be sitting in it forever, or I'm going to get stop hunted before I get out. Like before it moves, it's just going to stop hunting me real quick, right? And then people put in their stop losses way too tight. Like if I took it short right here, my stop loss is going to be, I mean, I don't want to have too big of a stop loss on this example, but my stop loss would be way up here in your structure, right? In your previous structure, try to put a little bit above, at least protect me a little bit, you know, because I know the market doesn't want to go back up there to let people go. All right, not yet. Okay, but once again, notice a reversal pattern right here on the 1 hour chart. Tiny reversal pattern, but notice there's the spike. There's the spike past the previous highs, right? It made a higher high. But what happened? It was just a stop hunt, and then we had a nice reversal pattern after it, and boom, drop. Okay, broke out of the triangle, right? Our ascending triangle broke out of it to the downside. We're going short, and boom, racked up pips. Come back to retest the quarter point. Okay, so these little yellow boxes are the quarter points, guys. So I'll go more into that in the advanced quarter points video. I figured out a little trick with the quarter points, following exactly how the book says it. I just applied a little bit more of my knowledge, you know what I mean, to the quarter points. And then, yeah, but we'll get more into that in another video. But I hope you guys learned something from that one. Once again, find an easy to identify move. Pick your bias, up or down, downtrend, right? Uptrend, downtrend, bullish trend, bearish trend. Identify your market first, if you're in a bearish or bullish market. Look for an easy identify up move or down move. Measure it with your Fibonacci. Wait for the retracement, and wait for some type of formation to form within that retracement. It's that simple, guys. That simple. Add in quarter points, add in more confluences, right? Like, oh, hit my zone at the same time hit the fib. It hit my trend line at the same time hit the fib. So, you know, I mean, you just have more confluences. Always try to add in, you know, 2 confluences to a trade or more. So I'm not gonna take a trade just based on a reversal pattern. That's stupid. Okay, I will take it off of. Let's say if I see the reversal pattern right here and I'm about to short it, I would look, I would zoom out, and I would start measuring. Okay, I would measure. Okay, it looks like this right here broke the low, so it looks like we're starting a downtrend. Wait for the retracement, then look to go short. Okay, guys, very simple, very simple. I hope you learned something from that one. That's advanced market formations. As far as I'm concerned, no one else knows this, and if they do, they don't talk about it. I think I'm the only one who's really explained this and put it into words. You know what I mean? Not everyone can see it. People know that there's market formations near those fib levels, but they just don't understand how it works. Okay, so once again, you're going to get those formations near the 38.2. You're going to get triangles, ascending triangles, descending triangles, wedge type patterns, rectangles, like this little rectangle right now we're looking at. Okay, those are the type of formations you're going to get there. The 618 and the 786, you're going to get more double tops, double bottoms, triple tops, triple bottoms, head and shoulders, inverted head and shoulders, spikes. Okay, you're going to get those near those Fibonacci numbers. Okay, that's simple, guys. That's simple. Back test and try to find some. Identify an easy move, down move, retracement. Try to find a formation in this retracement. Try to find some type of market formation. All right, to go back with the trend. Very simple, guys. So hope you learned something. On to the next. Peace.